Today, I'm going to ask you a question. Are you in the market for a high-cost property but struggling to secure a mortgage loan? Look no further than jumbo mortgages with Nexa Mortgage. Hey YouTube Nation, this is David Xie with the Xie Mortgage Team. Here's the scoop. Housing prices have been increasing. And with the increasing housing prices, we're now starting to see loan limits increase. However, the loan limits are probably not keeping up with the sales prices because we still have a major inventory shortage. So today we're going to talk about jumbo mortgages and how they work and how they can help you secure the dream home that you're looking for. Number one, low down payments. Low down payments are extremely important, right? So a lot of times when we're thinking about jumbo loans and we're thinking about regular conventional loans, we're thinking about 20% down. 20% down is typically something that, yes, it's something that most loans do require so that you get out of the mortgage insurance realm when you're looking at a conventional loan. However, when we're talking about loans that are up to $10 million, wouldn't it be a lot better if you can come with 10% instead of 20%? I mean, I know you guys are nodding on the other side of the screen, so yes, I do too. So when you're looking at these high cost areas, you really need to know the differences between a jumbo loan and a high balance loan and what type of adjustments are out there. So number one, 20% down is definitely not something that is required, okay? And if you're looking at a jumbo loan, we can typically look at investors that may have 5% options when the market's a little more not as risky. However, now we're looking at jumbo loans, we're looking at investors that are typically gonna require 10.01% down for a single family and 15% down for a multi-unit. And this kind of makes home ownership a little more affordable when we're looking at the lower down payments. The second thing is that with most of these jumbo loans, one way that you can really save money is in mortgage insurance. There are jumbo products out there that are going to require mortgage insurance, and I'm not going to say that they're better or worse. However, there are also options out there for jumbo loans where you have a no mortgage insurance or no PMI option altogether. So you could actually go into that same loan with a lower down payment, such as the 10.01% or 15% down, and you could actually go into that loan and not have any PMI altogether. Jumbo loans can also be used as cash out refinances. So with cash out, with the values of houses going up significantly and with the cost of everything increasing, or maybe you want to buy another investment opportunity or a vacation home. This is really good, especially in the jumbo market where you can actually take some of the money out to be able to do some home renovations, because you may have gotten a loan that's an extremely low interest rate and it's just cheaper to stay in the house. So you can use it for home renovations. You can also use it to create more wealth or have additional properties. To put money down on another property. You can also use it for debt consolidation because you've gone out there and you've bought like a bunch of $8 a dozen eggs and now your credit card bills are all run up. So cash out is definitely a really good option for it. With the processes of the jumbo loans and all of our different investors, typically, the documentation that's required is the same type of documentation when you're getting a standard conventional loan. So the rule of twos is what I usually go by. So 2 months of bank statements, 2 months of pay stubs, 2 months of, or 2 years of W-2s, any asset statements, any liabilities, and any income. Income, assets, and liabilities are needed. With those, once you gather everything, it will simplify the process significantly for you. So make sure you have all those documents before you go into the next step, which is qualification. To qualify for a jumbo loan, we typically will need a score of 680 unless you're going more non-conforming or something that has a little higher rate. And that's typically going to be for your primary residences, vacation homes, investment properties, and second homes. With these, there are different terms that are available, such as 15-year terms and maybe adjustable rate mortgages or interest-only terms out there that could make it a little more affordable for you. However, the properties must be 1 to 2 units, with the exception of certain investment property homes. And at those points, we are looking at like multi-unit options and things like that. And those are really great for generating rental income. Finally, if you're looking for a high-cost property or jumbo, make sure you're looking to see if with those jumbo loans, if you would qualify for a high balance, because jumbo loans typically are going to have a little more cash reserve requirement. So what that means to you is we're going through the process, and after you put your down payment and your closing costs down on purchasing a home, how much money do you need after you put everything down. Certain loan options may require 12 months of cash reserves and 12 months of mortgage payments. Some are 20 months, some are 24 months. And the more months of cash reserves you have, the better it is to qualify for the jumbo loan. However, if you're looking at a high balance, those are typically just conventional loans that are over the conforming loan limits, okay? And when you're getting those loans, there aren't as many cash reserves and as many hoops as you have to jump through. So if you have any questions about purchasing a home, your dream home, with a jumbo loan or a high balance loan, we'd love to help you out. We are a wholesale mortgage broker, Xie Mortgage Team, powered by Nexa Mortgage. And I'd love to help you out. Our phone number is 757-478-8493. And I would love for you to call me. I'm just saying. Talk to you later. Bye-bye.